The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at the cattle markets and overall beef demand, we want to talk about the latest global beef quarterly for quarter number 2 of 2024, just out from Rabobank, and have a discussion overall about things. Joining us here on the program, he is Senior Analyst, Animal Protein at Rabobank. Lance Zimmerman is with us here today. Lance, it's good to talk with you again. How are you?
I'm doing great, Jesse. Thanks for having me on today.
Well, I know this brand new quarter 2 beef quarterly, global beef quarterly out from Rabobank here just in the last couple of days. And let's use that as our jumping off point. What were some of the big takeaways that you guys found in terms of global beef, the global beef outlook and more here, Lance?
Yeah, I think one of the great things as you think about the global market is we're operating in a global environment where I think we really have two markets, two different tiers of markets, two different reactions to the market right now. You have two countries that are leading with higher, stronger, near record high or record high prices, and that would be the U.S. and Canada markets right here in North America. And then you have a marketplace where things are a little bit more stagnant. Australia, New Zealand, Uruguay, Argentina, even Brazil would fit into that price trend where prices have been softer as we've gone from 2022 through 2023 and into 2024, as a lot of those countries, as we think about the differences between those higher trending global markets and these lower trending ones, is I think supply. Brazil, Australia, New Zealand, even some of the Central American countries and South American countries, all seeing steady to stronger supplies, being markets that their supply potential outpaces their domestic demand, even in many instances where they're much more dependent on trade. In the US and Canada, we have a much stronger domestic base. And even if you argue Canada doesn't have this robust domestic base, they're neighboring to the US. And so those tighter supplies that exist in both the US and Canada are translating back to better support for that marketplace and for beef and cattle markets in general.
I think in terms of supply, especially just U.S. focused here, of course, we've been talking about it for a couple of years now. The downtrend in the cattle herd here in the U.S., the eventual rebuilding of the cattle herd that feels like it's close, maybe not quite there yet. In terms of just this U.S. market in general, let's pick that apart a little bit here, Lance. I mean, where do things stand as we continue to see very strong prices here, futures, cash, etc., as we work into the summer months?
Yeah, I think we've had this discussion many times over the last couple of years of when do we get the U.S. beef industry transitioning back to a herd rebuild. And as you and I've talked over time, I've said the first thing we got to do is just get back to stabilization. And I think the message that I would have for your listeners is that I think we're entering into a phase of stabilization. We're slowly but surely getting there. When you look at the supply dynamics taking place in the U.S. right now, when we look at the slaughter decline that we're going through, and we look at those first quarter numbers, cattle slaughter is lower. Basically 6% year to date through that first quarter window. But cow and bull slaughter is really leading the way in terms of the year over year deficit. It's down 13% compared to steer and heifer slaughter only being down 4% through those first 3 months of the year. We're starting to see cow slaughter, specifically beef cow slaughter, really shrink. On the dairy cow side, we're also seeing some pretty considerable declines year over year there. They went through most of their liquidation last year. And we're starting to see that milk to feed price ratio really strengthen. And so as a result, I think the good news is the culling activity is slowing. We haven't leaned into heifer retention, though, yet. When you look at the April 1 cattle on feed numbers that were reported to us, The percentage of heifers, the total number of heifers on feed, still very strong. As you get a little bit closer to the ranch, we can look at the percentage of heifers in feeder cattle and calf sales receipts. It's still at or above year ago levels. And so we haven't got the producer leaning into heifer retention just yet. But we certainly have gotten the cow calf producer to sit back and say, you know what? We've culled this cow herd back to a level that it can survive even if drought rears its ugly head again. And so far, we haven't had drought challenges. We're looking at the percent of cow herd, the nation's cow herd in drought right now. It's less than 20%. The challenge is you talk to folks throughout the Central Plains, and they'll be pretty quick to tell you grass looks green, crops are planted, wheat harvest looks promising, but there's not a lot of pasture and stream water yet. They've had just enough moisture through the winter and just enough moisture through the spring to make things look really good. But they also know we're getting into that hot season, right? We're starting to feel that as we've entered into June, July, and August, we're really going to lean into that aggressive heat. We'll probably turn the country pretty dry again as we navigate through summer, unless we get unseasonally wetter the next several weeks and months. But overall, producers have enough optimism to not sit there and lean farther into liquidation. Gives us an opportunity as we get towards fall to watch those calf sales and see if we get some heifer retention as we get to the fall run.
We're talking with Lance Zimmerman, senior analyst, animal protein at Rabobank, here today on the show. Lance, in terms of export and or import demand on the beef side here, thinking U.S. specifically, but also globally, we can kind of rope this all together. Any big notes on that side of the equation that you guys are watching right now?
Yeah, as you look at imports over the last 12 months, just so we don't get some weird seasonal inconsistencies in the data, over the last 12 months, US beef imports are up 15%. Of course, when we talk about importing countries, we're really talking about five main players: Canada, Mexico, Australia, New Zealand, and Brazil. And of those five main countries, the two leading with growth over that 12-month period are Australia and New Zealand. Australia is up almost 50%. New Zealand's up almost 30%. We're going to continue to lean more into imports going forward. When you look at our domestic 90% lean trim market, we're putting in new record highs, $3.50 a pound on a wholesale basis. That's pretty attractive when you think about bringing in additional lean beef imports, and Australia and New Zealand fit that bill very well. Conversely, you look at the choice select spread dynamic we're in right now, it's been considerably narrower than last year. It's not because of weaker choice beef demand. Actually, I would tell you, you look at choice ribeye, strip prices, and the like, yeah, they're not at all-time highs, but they're still historically strong. A lot of the narrowness in the choice select spread is we're seeing a little bit more demand from the select side of the meat case, whether that's food service demand, whether that's the retail consumer transitioning and trading down a little bit. It's still a little bit hard to tell. We certainly know there's some trading down happening, but I do think that that select market being stronger is going to make it attractive for Mexico to be exporting into the US. And conversely, US buyers will be interested in that Mexico product, especially if we have some weakness introduced into that peso longer term.
You mentioned Australia in there, and I know you just returned from a 2-week trip to Australia to kind of take a look at their cattle industry and much more. What were some takeaways you got from being on the ground in Australia, Lance?
One of the really interesting things when I was over there, and I had the chance to do multiple presentations, almost a dozen presentations, met with over 600 bank clients face to face. What was amazing to me is just getting reinforced that idea that we've talked about before, but to see it realized is how when the US cattle producer is stressed out, the Australian producer's usually doing pretty good, and vice versa. I was last in Australia in 2014. Times were pretty good in the US cattle business then, and those Australian producers were struggling. Right now, we're the producer group globally going through our own fair share of struggles. While prices are better, optimism's still not fully rekindled. And that's been the exact opposite in Australia. They went through 3 years of massive drought in 17, 18, 19 when we still had it quite good. We were still rebuilding the cow herd in that time. Now we've gone through 3 to 5 years of some real bad weather challenges and margin challenges. It's been one of the better 5-year stretches there in Australia. And so the big question they had was the same one we did just talked through. When are we going to go through that herd rebuild? They're seeing the growth in imports from the US and they're excited about that. But really what they're also looking at is how can they also just have a better, more dynamic demand factor in their markets as they can hopefully take on a little bit more export business. Because as our domestic prices go up, we're less competitive in that global space. And they're seeing some of that. We talked about imports earlier. US beef exports are down about 13% over that same 12-month period. Our 3 biggest markets are South Korea, Japan, and China, and our exports to those countries in the US is down 25% year over year in that 12-month window. Conversely, Australia's been able to creep into that market a little bit more over the last 12 months and perhaps see a little bit more material benefit there than even just the US import increase. Their product isn't going to replace ours 1-to-1. They recognize that. Even their grain-fed product, they only feed it about 100 days. We feed ours 180 days today. And so it is a different product, but they recognize that a rising tide lifts all boats. And if we're putting less product in the global marketplace, they can lean more into that. And that's good for them because cyclically, they're producing a lot of beef right now.
Well, I know folks can take a look at the latest Global Beef Quarterly for Q2 at research.rabobank.com. And Lance, as we wrap things up too, I know another piece of that Global Beef Quarterly that we could probably spend another half hour on looking at climate and some of the greenhouse gas emissions, regulations, and more that are coming into the beef industry. I know you guys did some work on that in the latest Global Beef Quarterly, didn't you?
We did. And man, I tell you what, I get when it comes to agriculture producers, and in some cases, we almost feel like the sustainability word gets, bantered about almost too much to a point of exhaustion within the ag industry right now because it's all that the food and processing segments want to talk about, and they realize they need to partner with us in that area. But Anna Drake, our Australian sustainability analyst, and Charlotte Talbot, our North American sustainability analyst, wrote that feature article. And I really do encourage your listeners to go out and read it. I feel like they knocked it out of the park. They talked about, hey, we have a lot of US food companies in the beef space that they've made a lot of commitments, some of them aggressively so. But none of those commitments can be met without getting the data to navigate what progress we're making towards carbon, towards methane emissions, towards all those climate related statistics. And now that we're getting closer to some of those science-based targets needing to be met in 2030 and then again in 2050, food companies are realizing it's really tough to measure some of these things at a practical boots on the ground level. And so Charlotte and Anna did a great job of mentioning the tension that exists in the marketplace right now, and that we're actually seeing a great recalibration and a great realization in as those deadlines approach. Can we actually achieve what we committed to 5 or 10 years ago? And so I encourage them to read it. I think that it's a really well written piece, and it talks about the tensions that exist at the producer level quite well.
Well, again, folks can find more online, research.rabobank.com. And with that, always enjoy a conversation about the beef industry. Lance Zimmerman, Senior Analyst, Animal Protein for Rabobank. Lance, good to talk with you again. We'll look forward to talking to you again real soon.
Absolutely. Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.